Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir, Sofi, Laser, and Matterport. We'll be going over their latest news updates, price targets, what professionals think of these companies, where their future share prices are headed in the future, what I think of these companies, and if you should buy them or not. We'll be analyzing a plethora of articles in this video, to where the first one is titled Palantir Technologies Inc, ticker symbol PLTR, gains but lags market, what you should know. After that, we'll dive into another article about Sofi, giving you the latest update on their overall court hearing, to where they are suing the Biden administration regarding the student loan payment moratorium, because they want the student loan moratorium to end as soon as possible, because this has cost them millions of dollars. Sofi's main argument here is that it's illegal for the president and other government entities to continue to push out the student loan moratorium longer, even though the general reason why it was originally instituted is no longer applicable. So we'll talk more about that when we come to it, and I'll give you the latest news updates on that story. We'll also talk about how Sofi stock is a buying opportunity according to this chartered financial analyst. So we'll be going over their price targets, price predictions, and where we could see this company in the future, whether or not they win that court case against the Biden administration. Then we'll move on to talking about Laser Photonics, which recently announced an initiative to drive expansion of their service partner network. So in general, this is a company that you all wanted me to quickly review, so I'll give my thoughts and opinions about it. And then lastly, we will end the video talking about Matterport, which has recently expanded their platform integrations with Autodesk, which is absolutely phenomenal news. So for more videos on Palantir, Sofi, Laser, or Matterport, remember to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Palantir, as you probably already know, ticker symbol PLTR, is a big data and analytics company that serves both commercial clients as well as government enterprises. Essentially, Palantir analyzes large data sets, and it gives an institution's management the best decision-making opportunities and the risk to reward depending on what decisions they make. So essentially, it helps a company's management make better data-driven decisions. Right now, the PLTR share price is trading for around $7.89. However, Wall Street is looking for major positivity regarding Palantir's PLTR stock as their next earnings report approaches. For instance, in their next earnings report, experts believe Palantir Technologies will post earnings of 4 cents per share regarding their EPS, and this would mark a significant increase of over 100%. Meanwhile, other institutions have a consensus estimate for their revenue projections that come in of around $504.9 million, which would represent a 13.11% increase from a year ago. Now, although that increase in revenue actually isn't that impressive, especially considering that it is a far cry from that 30% that we were promised a year ago, their earnings per share are absolutely skyrocketing, and that's the metric that investors are going to hone in on and get excited about. Zacks actually has a full-year consensus projection that calls for earnings per share to come in at 20 cents on the positive side and revenues to reach $2.2 billion. This would mean that Palantir is growing at 233.33% and 15.66% respectively regarding their earnings per share as well as their overall revenues. This could cause the share price to at least surge temporarily in the short term due to a very positive earnings report. Palantir Technologies currently has a buy rating from Zacks Rank as well as other professionals, especially as we enter into a time that Palantir is looking very positive regarding their earnings report. On top of that, currently, Palantir is trading at a forward price-to-earnings ratio of 40.21, and ideally, we would want this number as low as possible. This represents a premium, meaning that Palantir is trading at a more expensive price point according to their PS accounting ratio than their peers in their respected industry, because the average PE ratio in their industry is around 19.89. So Palantir is more than twice that, meaning that they are trading more than a 2 times premium. And this tells us that Palantir's share price is rather expensive. However, we also need to take into consideration their growth rate regarding their earnings, and that's where the PEG or their PEG ratio comes in, which is just 0.74 right now. And this metric is similar to the PE ratio. However, the PEG ratio takes into consideration their growth rate for their earnings. And if we compare them to their industry has a PEG ratio of 2.01. So technically, once we we consider their growth prospects, it means Palantir is actually a better buying opportunity than the average stock in their respected industry, as long as you're holding this company for the long term. So overall, I would say that is a very good news update for Palantir Technologies, to where analysts believe this company could be worth anywhere between $9 to $12 by the end of the year. Let's move right along and talk about Sofi Technologies and their latest update regarding their lawsuit against the Biden administration. As a quick summary, Sofi is one of the largest private student loan lenders in the United States, and they have sued the Biden administration over their latest extension of the student loan payment moratorium. The student loan payment moratorium prevents student loan borrowers from paying on their debt, and their debt is also not accruing any interest, and this has de-incentivized various student loan borrowers from refinancing their student loans with institutions such as Sofi. They also have calculated that this 8th extension of the payment pause has cost Sofi between $6 to $8 million worth of profit losses, and we could see total losses numbering close to $30 million if the payment pause were to extend through the month of August. So what is Sofi's main problem here? Well, according to the Department of Education, they have responded to Sofi's lawsuit because Sofi's main argument is that it's illegal to continuously extend the student loan moratorium even though the quote-unquote emergency, which was the illness, is essentially over, considering we have that under control now. However, the Department of Education has responded to Sofi's legal claims. Essentially, the Department of Education is saying that Sofi is just being greedy and they want to use their power and the law to get their way. And that's why the Department of Education released this update. And I quote, "This is an attempt by a multi-billion-dollar company," referring to Sofi, "to make money while they force 45 million borrowers back into repayment, putting many at serious risk of financial harm," end quote. So essentially, the Department of Education is pulling the emotions card. Well, guess what? Newsflash. The borrowers sign contracts to pay back their debt, and I expect that they should do that instead of having the taxpayer or the government float the bill for them. Essentially, the Biden administration is using the Department of Education to buy votes from younger borrowers by continuously extending this student loan moratorium, and Sofi is not happy about it. Sofi doesn't want to be political, they just want to get the student loan moratorium to end so their business can bounce back during harsh economic times. Sofi's lawsuit essentially asks the court to end the student loan payment moratorium for all borrowers, or at least end the student loan moratorium for borrowers who are not eligible for Biden's student debt cancellation program. And if the court rules in Sofi's favor in either regard, either ending the student loan moratorium or just ending it for the people who can afford to pay back their loans, this would cause the Sofi share price to absolutely skyrocket, because it means their future projections for their revenues and profits would drastically increase from what they are right now. But even if they lose this overall lawsuit, what would this mean for Sofi Technologies? Well, as of right now, the company's doing pretty good. As of January, the company reported net interest margins of around 5.94%, which is great. And they also saw deposits rise by around 46% during that quarter comparatively. This is why professionals believe Sofi Technologies could generate as much as $260 million worth of profit by 2025, which is extremely good for investors. The problem is that many investors right now are getting kind of antsy regarding financial institutions and banks, considering what's happened to Silvergate Capital, Silicon Valley Bank, also known as SVB, as well as Signature Bank. And the reason why investors don't like this is because recently bank runs have happened to where customers of these banks have ran to these banks, withdrawn all of their deposits, and the bank says, hey, I'm only required to have 10% of my overall deposits on hand. I can't pay you back right now. I have these in other investments. This makes other customers scared to also run to their bank and withdraw all of their money, and this causes banks to one by one go out of business. However, this is not very applicable to Sofi Technologies, which is why this author advocates to buy the dip on this stock, and here's why. Sofi's funds are far safer and less risky than these other banks that are collapsing. Sofi not only has diversified revenue sources, but they have very good risk tolerance. They are appropriately collateralized, and Sofi has stable deposits, meaning that their risk profile is relatively low. Now, while this fiasco goes on with various financial institutions and other banks, we could see Sofi's share price drop downward as investors decide to lose confidence in financial institutions, which would include Sofi. So, where is Sofi's price headed right now? In the short term, the company's share price could definitely fall lower. However, SoFi has a very good business model, meaning that they are at far less risk of a bank run than the majority of other banks. SoFi is likely to retain their overall share price, even though their fair value price, according to this author, is between $10 to $15, which means that investors could double or triple their money regarding their current share price. The company's tangible book value is also anticipated to grow by around 9% in 2024 and 14% in 2025 as their young depositors increase their overall savings rate and get further into their overall careers. Now, this doesn't mean that in the short term the company couldn't collapse to around $3 to $5, but over the long term it seems that this company is primed for future growth, and that's why I personally own this company, but I wouldn't over allocate yourself to this company. Keep your investments below a 5% portfolio allocation for any singular risky growth company. Now let's talk about some companies that you all wanted my personal opinion on, and let's start off with Laser Photonics, which currently trades for $4 per share. This company is a leading developer of industrial CleanTech laser systems for laser cleaning and other material applications, and they've recently announced an SPN program, which is a Service Partner Network program. The CEO of Laser Photonics said, and I quote, "The SPN is an integral part of our growth strategy, enabling strategic alliances with individuals and companies that will help drive our long-term growth objectives. Today's announcement includes the formation of an internal team dedicated to supporting this program and enabling our state-of-the-art product portfolio to reach potential customers more quickly. By enabling entrepreneurs to provide a vast array of services to the industries we serve, both on a domestic and international basis, we believe we can speed adoption of our world-class products," end quote. So this is a very positive opportunity. On top of that, Laser Photonics projects an additional 5 to 10 new service partners in major markets such as the automotive market, the aerospace market, the shipbuilding market, and nuclear and military facilities during the year of 2023. Last year, the company also financed agreements with 12 service partners, leading to over $1 million worth of sales, and they also had partners that generated them around $1.5 million worth of revenue. In the end, Laser Photonics is a green energy technology company, and the share prices are relatively cheap. However, what do I think about this company? I think there's just not enough information about this company for me to provide an educated opinion about it. I tried to see what analysts, professionals, and experts in this industry and this overall stock say about it. I really couldn't find anything. So in general, this company is just a general question mark. However, if you are into green energy stocks, feel free to look further into this company. Ticker symbol LASE. But as of right now, there's not enough information for me to provide an adequate educated opinion. I would rather just tell you I don't know or I'm not sure instead of telling you something false. I need to follow the data here. Last but not least, let's talk about Matterport, ticker symbol MTTR. Matterport essentially provides technology to where you could enter a room, take photos of the room, and then they have software that will make a 3D model of that room. This is amazing in regards to construction, real estate, and many other types of markets. And recently, Matterport has announced an integration with Autodesk Construction Cloud, which has a portfolio of software and services that, according to this article, combines advanced technologies, a builder's network, and predictive insights for construction teams. Many construction projects rely on complex two-dimensional or three-dimensional files that often result in project inaccuracies, and this is where Matterport software will help this company substantially. The chief revenue officer of Matterport said that professionals in architecture, engineering, and construction want the ability to manage their entire project portfolio from anywhere they are without having to sacrifice quality or time to build. He goes on to say, "This integration builds on the digital transformation Autodesk has been leading in the construction industry for decades, leveraging Matterport's digital twins to create a visual source of truth relative to the work to be done on-site in Autodesk Construction Cloud. Now, all project stakeholders can experience a more efficient RFI process from anywhere with the same precision as if they were in person, streamlining communication to maximize project visibility and cut out unnecessary delays." This is a fantastic development for both of these companies. Right now, the company trades at around $2.50, while on the low end, analysts believe this company is worth $3.50, and on the high end, some analysts believe this company could surge up to $8 per share. But in general, I would say this is relatively a risky investment, especially considering current macroeconomic environments, but over the long term, it could definitely trend upward. So I would love to hear your thoughts on Palantir, Sofi, Laser Photonics, as well as Matterport. Remember to go and annihilate that like button for more news updates just like this one. Subscribe if you are new, and I will see you in the next YT video.